Does the DXY have what it takes to extend the breakout that we're seeing so far here? I'll show you what buyers have to do to target higher levels, plus the latest on the EURUSD, which is starting to break down. Now, before we get into today's video, I do want to mention, guys, that if you want my help with your trading, plus daily videos, and also to see my trades in real time, head over here to this page. So click on the link at the top of this video and head over here where you can sign up to my preferred broker, deposit $100 or more, and trade at least one lot. Do those two things and you will get a 30% deposit bonus plus lifetime access to our VIP group. All right, so see the link in the description of this video, or if you're on the website, click on the link that says broker at the top of this page and you will be taken to this page to sign up. Okay, so let's take a look here at the DXY, guys, which we know that, going into this week, we knew we had an initial breakout from last Friday's candle. And specifically what I'm talking about here is this green candle right here. Now, the market was below 104.45. So that was the big hurdle this week that I mentioned in the last weekly forecast last Saturday. And you can see why this is significant back here at 104.45. Okay, so if we do get a sustained break above this, now there's still several hours left in today's session, so we don't have a confirmed break just yet. But if we do get it, then we're looking at a move back here toward this 105 area and potentially 106. Okay, now you can see support down here. I mentioned in yesterday's video that there was a chance that we could see a sweep of that Tuesday wick. Okay, so notice how so far this week, this was the FOMC candle. Notice how right off of resistance here, and note where this week came in with the low, okay? So this candle right here, this wick, what I mentioned in yesterday's video was that there was a chance we could see a move down here to fill that imbalance. However, if we do get the DXY breaking above 104.45 on the daily time frame, then that is going to lessen the odds that we get a move down here, okay? If the market stays below this area, then we could see a sweep of that Tuesday wick, okay? So stay below this on the daily, and we could get a move down here first before we get that move higher. But if we get the DXY closing up here this week, then in my opinion, the odds of a move down here are less likely, okay? So just keep that in mind though, but we do still have, several hours left in today's session. It's also a relatively illiquid week. We haven't had that much event risk, plus we have a holiday coming up, Big Bank holiday on Friday, tomorrow. So just be careful with these markets. We are seeing an initial breakout from the DXY above 104.45, but I really want to see where the week closes here before I call this. All right, so let's take a look here at the EURUSD. And if you guys are enjoying this content, be sure to subscribe to the channel and click the bell icon for notifications. So the EURUSD, guys, this week has played out really well. If you guys remember for the weekly forecast, what we talked about was that we had the breakdown below here. So you can see that this was our key level going into this week, key resistance up here, 1.0865. This is the same level that I had on my chart on Saturday. You can see this high right here was 1 pip away from that level. So really nice entry up here if you were able to catch that short. Now, the next hurdle though for sellers was always going to be 1.08. And that's because if you'll notice back here, this has been a pivot, okay, for quite some time. So you've got the lows back here, you've got highs, lows here, and lows here recently. So if we see the EURUSD close below this level, okay, specifically 1.0797, that's what I want to see it get below today. If it does that and we see the DXY close above the 104.45 level, then we are looking at a potential breakdown here for the euro to target 1.073. Okay, so this was the level that we saw the fake out develop from right back here. Okay, so key level through here, 1.073, fake out below, we got the rally. So this would be the next target if the market closes below 1.0797. All right, so pretty straightforward for the EURUSD. Obviously, if the day closes back above this area up here, so if we do see the euro recover into the 5 p.m. daily close, right, and get back above these lows back here, if it does that, it closes somewhere up here in this area, right, then I do think this level stays intact as support, and there's that chance we get the move up here toward this upper wick to fill this imbalance before we see lower. But regardless, I am going to stay bearish on the euro, considering that EXY breakdown that I talked about last weekend. Okay, so that was a big breakdown in my opinion, and we're also seeing the DXY, again, start to break out from this channel. And furthermore, guys, like I've said for the past few weeks, I've maintained this actually since the start of this year, where this move down here, Okay, so this move down here toward 100.85. This was simply a retest of the range lows for the DXY back here, right? So this was a fake out below. This was our fake out above. You can see range highs back here. And so this has just been one big range for the DXY. Now, this was a retest at the end of 2023, right there into those range lows. This was also a fake out below 101.9. So if you guys will remember, this is where I turned bullish at the start of this year on the DXY. I also turned bullish over here at 103 because this was also a fake out below this area around 103. Okay, so, bullish down here, bullish over here. And so far, those were pretty good decisions, right? To turn bullish over here because we got a nice move. And so far from 103, we've seen a nice move from that as well. But the bigger point that I'm trying to make here with this is if you study the way markets move, okay, you typically get impulsive and corrective moves. So if this over here is our correction, okay, so if this portion, this pullback right here is our correction, it means that this down here is the impulse, this is the correction, and this that we're seeing right now is the next impulsive move. So that means that as long as the DXY is above this area down here, okay, and if it gets above 104.45, then that flips to support, but we're looking at a move up here toward 105 and 106. Now, it doesn't mean that the market can't pull back. We could still see the DXY close below 104.45 because it's only trading at 104.54 right now. So it's not that far above, and it's an illiquid week. So just be careful with that. We could still see a pullback, but ultimately, okay, as far as a trend is concerned, I do think that looking at this, this is your impulse, this is your correction, and the next impulsive move started back here with that 103 reclaim that we've talked about at length on this channel and website. Okay, so I know a lot of people have given me a hard time about being bullish on the dollar, but it has proven to be correct, at least so far. So we'll see where this lands, but really for me, I'm going to stay bullish, cautiously bullish on the dollar while it's above that 103.8 to 104 area. Subscribe to the channel and click the bell icon for notifications. Don't forget to sign up with Blueberry Markets, deposit $100 or more to get your 30% deposit bonus plus lifetime access to our VIP group. Click on the link in the description of this video, or if you're on the website, click on the link that says broker and you will be taken to that page to sign up today. Have a great holiday weekend, and I will talk to you soon.